Hello, everyone, and welcome to ACAM's webinar, Leveraging Digital Identity Intelligence to Mitigate Financial Crime Risk, sponsored by LexisNexis Risk Solutions. My name is Ana Aguilera, your host for this webinar. I will go over a few housekeeping items before turning the program over to our moderator. Next slide, please. During the event, the presentation slides will appear on your screen. If you would also like to download a copy of the slides after the session concludes, please navigate back to the webinar launch page for a download link. Webinars are enhanced by your participation, so we do encourage live attendees to send your questions by clicking on the Q&A icon at the bottom of your screen. Attendees will receive 1 CAMS credit for this webinar so long as the webinar is watched to completion. Webinar progress and completion is tracked based on the time the webinar window is actively engaged. Therefore, the webinar must be open and active on the webinar browser for the LMS to properly track progress. Next slide, please. If you experience any issues during the webcast, please hover over to the bottom of your Zoom meeting screen to make the meeting toolbar visible. If the far left icon is a headset labeled Join Audio, then you have not yet connected your audio. Click the Join Audio headset icon and select either the phone call tab to join by phone or the computer audio tab to join by computer. If joining by phone, be sure to use the dial-in phone number, meeting ID, and participant ID given on the phone call tab. When your audio has been connected by phone, the far left icon will change to a handset labeled mute. Next slide, please. Our speaker for today is Daniel Wager. Daniel Wager is an experienced financial crime compliance and investigations executive with extensive experience in developing and running programs designed to prevent, detect, and report money laundering, sanctions violations, and arms proliferation and other crimes. As a respected expert witness in civil and criminal litigation, he is a trusted authority in interactions with regulators and enforcement agencies. In his current positions, he assists regulated and non-regulated entities in avoiding legal, regulatory, and reputational risk while protecting the global financial system from illicit fund flows. He joined LexisNexis Risk Solutions in 2016 from a long and meritorious career fighting financial crime. Welcome, Daniel.
Thank you, Anna. Oh, I've got an echo there. If everyone could mute me. All right. Well, thank you all for joining today. That number, I'm going to do a little intro first. Our participant number is rising pretty steadily, and I just want to express my gratitude for everyone for joining today. It is strange times. We all, given the sizable number of people logging in, I'm actually very pleased. I don't know if it's the 1 CAMS credit or perhaps the topic today, but I really appreciate you all taking time. I will strive to make it completely worth your while in joining us today and sparing an hour of your time. I know these days that many folks are weary of teleconference. There's not much novelty in a video presentation. So very importantly, I just want to say to everyone, I hope that you're well. I hope that you are staying safe. I hope that your families are well. So this time is absolutely critical. With many of you in the professional field here working remotely, our jobs have become more important than ever. The jobs of people in government, in the regulators, in the regulated entities, in solutions and services. Never has it been a more difficult time to operate and a more important time, because I will start off by just saying that the fraud that we're going to see and that we are seeing begin to arise from stimulus programs and the general COVID influenced business environment will be absolutely staggering. It will be an epic amount of financial crime. Much starting off as fraud, most of that to be laundered. So it's all over our sweet spots. And I just thank you again for joining today. So I'm going to go ahead and start. Much of what I'm going to talk about today, everything's going to be focused on digital identity and digital attribute intelligence. And just a little background on that. This is not a sales pitch. Obviously, it has a brand behind it. That's part of the way we operate in these things. But it's not a sales pitch. Many of the capabilities I'm going to talk about today are part of our threat metrics solution suite. The threat metrics solution is a contributory environment, a very advanced and proven fraud tool that we are evolving into a broader financial crime use case. And many of the capabilities I'm going to address today are in that space. So you can look at that. I will not be speaking anymore about specific products, but instead about capabilities. that we all need to be leveraging. So digital, obviously this is something you all heard in the last couple of months, 6 months. I don't look like my picture anymore. I look like a COVID shell of myself, but I did get a haircut yesterday. I hope you, my biopic will need to be definitely updated when we're done with this, but we're operating digitally. We're operating on webcams. We're interfacing with our banks, with our grocery stores, the other things more and more through a digital channel. So the digital channel is actually carrying the majority of transactions, and actually COVID just accelerated this to where it actually has become the vast majority of transactions. It's absolutely changing the way we interact and transact with buyers and customers. Transactions, this was an early estimate. So if you look at the digital payments estimate, there are 4 trillion this year. I think that number is going to be vastly exceeded. Even with the reduction in global commerce that has come with this, there are still a staggering number of transactions going on. The transactions have changed, but the way we address risks has not always changed. Many of the habits that we have and the way we investigate, the data points we look at are still, unfortunately, circa 1999 or maybe at best 2009. There are some of you who are out there working in really advanced spaces, so I want to give credit where it is due there. You're working in spaces to create novel approaches to financial crime. That's what we're going to talk about today. And I commend you for that, because we definitely need to head towards more meaningful financial crime control structures. And the bottom bullet here, frictionless customer experience, that's an imperative, absolutely. Times could not be leaner. Bottom line is incredibly important. People expect millisecond return times with accurate results. And that's what we should be striving for. So let's go ahead, Deanna. Let's move ahead a slide. Just some background on this. Again, these numbers change literally by the minute in the current COVID environment. But cyber spending expected to be up $133 billion globally by 2022, and that again will likely rise given the current environment. Risks are increasing according to the experts in the field. Breaches is still a huge issue. The average cost of breaches, gigantic, 3.9 million. That's just a suspected data breach or a potential data breach. The actual breaches on epic scales have brought much higher cost. Hackers, obviously still a huge issue. Go ahead, Deanna. Sanctions risk, though, is an underlying topic that you're going to hear me addressing off and on throughout our discussion today. Sanctions enforcements are somewhat slow right now. I think my guess would be there's a careful approach to this going on within government. Clearly, both sanctions and stimulus funds and things like that, they want to take a look at making sure the economy is not impeded by enforcement, but have no doubt there will be enforcement. The enforcement will follow this period, and you can count on the fact that people are violating sanctions, and sanctions risks have grown immeasurably in this time. It's absolutely staggering. Just a quick figure here on GDP that's laundered. Figures you've seen varying amounts here: 800 billion, 2 trillion. I think again that laundered amount is probably going to double this year, given the amount of stimulus funds. Let's go ahead, Deanna, because I actually wanted to pivot onto the sanctions piece. This piece shifts more to the sanctions side. E-commerce, very welcome here today. In fact, a lot of our leading insights and best practices are coming from our peers and partners and individuals in the e-commerce, non-regulated e-commerce side. As we all know, sanctions, no one can escape sanctions regulations. But increasingly the novel approaches to financial crime are coming from the e-commerce side. So a lot of folks today joining us from that side of the business, and it's very valuable because folks, the risks are different there. You may not have to detect and report suspicions of money laundering, but your sanctions exposure is even greater. And again, with the non-face-to-face world that we're living in, those risks are difficult to detect. We're going to talk about that today. Obviously, the penalties, 2020 number, I think we probably should be rounding up pretty soon because it's going to be well down from this. But in 2019, it was 36 billion for compliance penalties, and we have a link at the bottom there for sanctions and AML fines. That number is still made up of a lot of sanctions penalties, which are increasingly being applied to corporates. In 2019, almost 40% of the fines were related to sanctions. Dina, you can go ahead to the next slide. Folks, I do see some questions coming up. I do see some hands raised. We will get to those, I promise. We're going to save time at the end there. You can keep raising the hand and keep sending in questions, folks. We'll deal with it via the chat. So just a quick thought of this, you know, traditional solutions may not be the best here. And as a solutions provider in this space, we're always striving to do better. No one's perfect, but what I'm going to talk about today is radically different than our traditional approaches to transaction monitoring, to screening, to due diligence, to investigations. The manual approach, like, let me just get everyone thinking about this. If you are a financial crime investigations professional, or a financial crime professional, if you have investigators that still need to send an email to someone to access data points as simple as a device ID, an IP address, you have no insight as to whether that IP is from where that's coming from, whether it's a known Tor exit point or VPN, whether it's a proxy. So if you're still using those manual methods, it is absolutely critical that you listen to what I'm going to tell you about digital today, because it's all about automated. It's about finding ways to automate our more accurate identification of risk. I'm trying to flip the risk paradigm on its head. If right now the vast majority of alerts generated in name screening, even with the best solutions, are not true, false positives, why aren't we flipping that around to find tools that will accurately identify risk 95 or 99% of the time, as opposed to the inverse? We need to be real time. We do have an absolute need for real-time interdiction, whether it's human trafficking or child sex trafficking, whether it is you know, individuals laundering funds, pilfering from national treasuries. We can't wait 30 days in arrears for an aggregation to run against a series of transactions or activity. And this is thankfully a very big move in the industry to move towards more real-time identification. And we're trying to move away from physical. On the left-hand side there, you see physical identities. This is names, addresses, phone numbers, social security numbers, dates of birth, places of birth, etc. These are traditional physical identifiers. But, you know, as I think about OFAC program is incredibly important. It interdicts extraordinary amounts of money, but compared to the money exerted, often people question the effort. I say there's no question about the need for the sanctions regimes. But what we do need to do is realize that when folks are designated, they very rarely, almost never thereafter move money in their own name or hold money in their own name. Most of you know this. I'm not telling you any surprises. When a big bank identifies a series of shell companies and follow-on transactions that relate to an individual recently designated, they've often been working that case for months or even years. They're often relying not on simple names, but upon the careful and diligent investigation by individuals in their organization to find the trail of money leading to shell companies, offshore entities meant to obscure physical identities, because folks, the criminals are not dear to a physical identity. In fact, they just as happily create one, which is our growing risks in synthetics, or steal yours. And then finally, I'm going to keep raising this point because, folks, we all operate in banks, and banking is not about compliance. It's about money, moving money. It's about payments. Somebody told me that recently, and it really resonated with me. You know, banking is not about compliance. Sometimes I forget that. I mean, we're in our compliance bubble, but if you create too much friction, you can't make money. And what good are you being the head of compliance in a bank that has no customers, or very few? So we can't create friction. It's got to be a highly high throughput, high capacity, real time with probative insights to risk. Go ahead, Deanna, the next slide. So I'm going to throw up a poll question just to kind of start our session off here. Go ahead and answer this. You can click on your answer. Is your business currently monitoring clients online or digital behaviors and attributes? It could be logins. This could be their geolocation or their physical locations, their IP addresses. Are you watching for transaction device info and or other digital attributes? I'm going to give this a moment to run. It's actually interesting. You know, I don't want to sway the results, so I'm going to slow roll this comment, but We've actually got a staggering number of responses there. Thank you all for being involved. And you haven't gone to sleep yet. We're going to try to keep that up. Let's go ahead and close the polling on that one, if we could. 50%, just short of 50% saying, yes, you're collecting it. Here's the interesting thing. Almost every one of your enterprises has a system to collect some digital attributes. IPs and devices are the most common. Whether you know it or not, your infrastructure, if you interface with customers online, is likely collecting that data, or it resides somewhere in your enterprise data schema. So most of you should answer yes. The question I have, though, is do you really meaningfully know what they are and what you can use? And it's interesting here that hundreds of people said no, and hundreds of people said not sure. More than half said either no or they're not sure. That's, folks, what I want to change today. So let's go ahead and reduce that, and go ahead, Deanna. Yeah, we go one slide ahead. There we go. So this is, in the middle. I want to focus right on what most companies are doing. Most of you are looking at and blocking IP addresses when they come from sanctioned jurisdictions, or jurisdictions where you either are not licensed to do business, not desiring to do business. Doesn't miss your risk tolerance statement. Think about this. If you're a gambling entity, you may be licensed and chartered for online activity in very specific geolocations. Well, the obvious thing there is to make sure you're not dealing with a foreign originating IP address. Everybody in the gambling space has that quite well mastered, but it gets quite a bit more nuanced. What if the IP address resolves to your state or an adjacent state, or a provider, which services the state you're licensed in, and the one next to it? Well, that's where you have to start looking at geofencing, geolocation, tower data, other things that will help indicate where somebody actually is. And that's the gambling niche. This is a highly specialized niche with lots of need for special tools. But watch that space, because folks, again, that's where it's going to be. It's going to be online. Screening against watch list, everybody does. Most people do that in some way or another. And again, like most people are screening names and getting a significant number of false positives. Everyone in the industry working to improve that, some doing better than others. But again, I ask, how many times do you have a true match on a name? Because if you put my name on that list, well, let's just put it this way. Russian oligarchs have shown an uncanny ability to move funds out of their name the day before they're sanctioned. So it's not much of a secret. And they also know how deep our controls go. So monitoring for politically exposed persons, in some places where we have people on room, there's a regulatory requirement for that. In other places, it's just an expectation. But you're not leveraging digital if you're just looking at those physical data points. Even the IP, that's really not magic anymore. Deanna, you can go ahead. Okay, I talked about how they're not using their names. That's part of the reason that sanctions list screening is so burdensome. I think in most institutions that we deal with, we find that most voluntary self-disclosures arise from suspected misses and matches in the payment space because of velocity and volume and a paucity of time to work and investigate those results, and a limited amount of counterparty data or originator data or beneficiary data. Just not enough. But here's the interesting thing is the vast majority of those are not true hits either. It's just a common name. So what we're doing, it's incredibly important, but I'm asking you to try to think about how to work it more accurately. In a study that we ran in 2019, the average time to clear a sanctions alert was illustrated to be 4 hours. Now that's not just a baseline alert. That's that includes investigative time, level 1, 2, 3 investigations, et cetera. Does not include legal time and VSD contemplation, other things, but it takes a long time. We all know this. It takes far too long to clear a sanctions alert, especially if you have limited data. And the one on the right really resonated with me, because in our study, when we talked to people at every institution, the majority of institutions said, we're losing massive amounts of productivity, we're losing talent, and we're frustrating people because they don't feel that productive. So what I'm going to try to do again is point to something that's more productive. Let's go ahead and get into the details. All right, so let's just take a day. We operate a digital identity network that takes contributory data and analyzes network traffic across thousands and thousands of entities globally, both regulated financial services and global commerce entities. And in analyzing those, this is just a snapshot from about 1.5 years ago of a day's traffic for some jurisdictions that are of interest. I noticed Sudan is on here. If anybody was watching OFAC this morning, they let out a bulletin on the removal of the OFAC sanctions on Sudan, but continued requirements around trade and other things. But Sudan is on here. Some on here are sanctioned, some are not. Look at this. 83% of transactions out of North Korea use a proxy, a VPN, run through the Tor, use a proxy server or intermediary of some type. 83. Well, what's shocking to me is not that 83% of North Korea transactions, because actually, you don't know it, North Korea has its own internet protocol address block, but that only 83% are using a proxy, because that means that despite the fact that most jurisdictions in the world deemed North Korea to be prohibited from doing business, 17% of their transactions are still going in the clear, right from their IP addresses. Iran, 32%. Where's the other half of that? Where's the 68% that runs in the clear there? Again, the US, that's very US focused, but many global financial services entities, because of their dollar clearing needs or connections, are very careful about involvement with Iran. The others are also informative, but think about this. If they're using a proxy, a VPN, a Tor, any intermediary entity to disguise where they are truly coming from, that gives you tremendous insight into risk. Now just stop before we don't advance yet, Deanna. I want you to think about this. As you look at North Korea on there, most of you probably sat back and said, I'm not concerned. We block transactions from North Korea. And I bet you do. Most commercial and financial services entities, whether regulated FS or not, are blocking direct transaction from North Korea. But let me just ask you this. Some fellow tries to access your operating environment, whether it's banking or global commerce, to buy something or to order a wire, to open an account, view their balances, whatever, and it's straight from North Korea. Most of you will shut them down. They'll time out, they'll receive a banner ban, they'll get something that tells them you're not getting this transaction through. But let me ask you this. 5 minutes later, if they log in and their IP address is they're coming from France, do you stop them again? Just think about that. They try to log in from a sanctioned jurisdiction or one you don't want to do business. Right now, you're going to block them. Question is, when they come to you from a country that is not of concern, 5 minutes from now, are you going to block them again? Because you probably at least should consider it, right? Now they're coming to me from France. Did they move from Pyongyang in 5 minutes to France? Did they move from Tehran to France in 5 minutes? They didn't. They certainly didn't, but they're likely spoofing their location. And let me ask you this, if they're using a proxy, if anyone has seen internet cafes in Tehran, I have no idea what they look like in North Korea, but in Tehran, there's VPNs of the moment, of the day. They hand them around. There's websites right now you can go on and say, VPN, Iran, best VPN for US banking, best VPN for playing video games. They're all on there. They're on the web, all over the place. They pass those credentials around. Some are paid and unpaid, but they pass around which ones are working. So there's my question to you. If you block them first, you should probably consider some risk for sanctions or concern against them 5 minutes later. And you've not been given a critical piece of intel, which is that that IP address might also have some residual risk to it. Doesn't mean a full-on block. I'm not saying stop it. What I'm saying is you need to look at that and say, how many others are coming from that one right now? All right, let's go to the next slide, Dina. It's another poll question. My organization is routinely exploiting, let's pop up the poll number for this one. My organization is routinely exploiting digital attributes in SAR preparation and reviews. So SAR prep, SAR reviews. Obviously acknowledging a lot of you are not in the SAR space, may not have SAR obligations. Numbers are still running up pretty good. Keep letting it go. Yeah, 30 seconds on that. You know, let me just put it on your thoughts on your mind here. I'm going to talk in a moment about how people are leveraging digital identity attributes, digital attribute intelligence in SAR prep. I think we're slowed down now. Let's publish that. This one's interesting. So in fraud, 25%. In fraud and FCC, 25%. Not at all, 14 and 36%. I don't know. Far too many people in the not at all and don't know columns right there at 50% again. Kind of the same as the last one, right? Which was 51% of the not at all, don't know kind of columns. Love the fact that 25% are using them pretty extensively. Not shocked that 25% are using them in fraud. What I'm going to talk to you about in a minute is going to be a big yawn to a lot of the fraud people. Don't leave yet. Don't leave, because I'm going to try to make it exciting. But fraud investigations have been using some of the more advanced tools around digital attribute intelligence for years because it's money directly out of the entity's pocket to claw back those funds before they move onward. Like, let me just ask you this one. If you walk down the hall, if you're not in fraud and you walk down to your fraud colleagues, most of you have a fraud unit, fraud-focused investigations, and maybe you're joined together now. Ask the fraud legacy colleagues, the fraud colleagues now, and say, what are you using? How are you leveraging this? One of the ones that you'll hear come up most frequently is the simple concept of multiple entities, multiple digital entities accessing the same account. Wait a minute, we're seeing near contemporaneous logins to an email. If you're an email provider, why are we getting contemporaneous logins from different IPs assigned around the world nearly at the same time? And there's also minimal message traffic. Anybody know what that's a typology for? Very little message traffic, lots of logins, geographically disparate actors using the same email account, sending very few emails. That's a terrorist finance typology. It's a terrorism typology. That's a very common way for individuals to communicate without passing actual emails. That's even off the financial crime topic. So let's get back to it. Go ahead, next page, Deanna. To get us thinking about this, I already asked if you're collecting and exploiting this info. Next page is going to be about what we can encourage you to share. Is it still done by emails and spreadsheets? Are you still emailing your colleagues in IT? Could you do a dump of devices for me? Let's actually talk about this for a second. You're doing an investigation on what you think is a trafficking organization, whether drugs, humans, sex trafficking, child trafficking, whatever it is, it's a trafficking organization. You've identified an account because either law enforcement has subpoenaed you, or you've gotten a direct contact from law enforcement, or another entity has sent you a 314B, or whatever. You're looking at it. Well, most of us have investigators that know how to say, for this account, show me the devices, just device ID. Show me the device IDs that have touched it. Again, because most entities on this call are collecting device and IP info, whether they realize it or not. Device, show me the devices. So if I have an account that is clearly linked to something suspicious and I find 15 devices on it, many of you still have to go and ask for a spreadsheet of all that. And it's a tab or pipe delimited spreadsheet, get a nice big spreadsheet with all the details on it. And you're sitting there plugging away, sorting them, looking at them, trying to resolve them back to their origin and see what providers they are and where. Well, only very few of you have investigators with the time to be able to say, okay, now that I've got these 12 heavy access devices, 12 devices that are hitting this account all the time, how many of you actually have the leisure of time to say, let's see what other accounts in my world those 12 devices touched? Bearing in mind, device is just one of the most basic elements of digital identity intelligence. How many of you have actually got investigators that can say, oh, let me just take a big stab and go back to the IT guys and say, take all those devices and run them against our universe? The fraud guys do this kind of stuff all the time because they are keenly interested in identifying accounts that are under common control, especially in fraud cases where you're trying to move and lock down accounts or balances before you are defrauded. So if you identify a fraudulent actor in one account, you want to look at what devices for certain, what static IPs, maybe even transients if it's specific enough, he's using, and then say, what other accounts has he touched, because you want to lock them down fast. Folks, why aren't we doing that in sanctions, in human trafficking, in other areas? I have and I think I'm hearing some conversation with somebody who's mute there. If we could mute, thank you. So my ask of you is, if you don't have the time to do that manually, you should be looking for solutions or opportunities to address it in an automatic fashion, because there are solutions on the market that can help you visualize connectivity between accounts, meaning why is this one digital entity touching 14 of my accounts? And I've got a bad indicator about one account, I'm going to lock down all 13. Or maybe I've actually got suspicion around it, I'm going to make a SAR. You might as well do a SAR on all 14 and not let them go up as 14 different cases. And then the final bullet on there is, are you comparing digital behaviors, customer digital behaviors with your KYC info? This one is the one we're probably farthest from, but which some folks in the market are making great strides in. And it's fantastic to see. I'll get around to talking about it in a little bit coming up, but just think about what you have when someone says, I want an account, I want a relationship, I want to sell stuff on your site, I want to buy stuff on your site, whatever it is, I want to move money through your payments interface. They interface with you and they provide you CIP, KYC info. And guess what, folks? Every time you fail them because you have a good control structure, you perfect them. Every time you fail them on an identity element, they up their game. But our controls environment is very limited here. Let's actually start talking about some ways to dig into this for KYC and other uses. Deanna, go ahead to the next slide, please. So the first one I already went on. This is where it gets really granular, folks. I'm going to ask you to really start thinking here, and then I want to take some questions. I want you to really think. I know it's a word wall. I'm guilty of it. It happens. I want you to really think about this. I said earlier, if you block them and they come back at you from a good IP, what are you doing about it? What are you doing about it? Think about it. They interface with your control structure. Your control structure stopped them from checking their bank balance while they're in North Korea. And then you said, okay, now you're in France 5 minutes later? Okay, come on then. Not good. Not good. That same account that just accessed you, maybe it was someone who's never, maybe that person legitimately was traveling. Let's not say North Korea, but let's just pick Iran. Iran sanctions, are heavily U.S. centric, with some exceptions. There are carve-outs for why people can go to Iran. Right now, it's a little difficult, but whether it's humanitarian purposes or family. So you may have a legitimate reason that a customer may go there and inadvertently use his iPad or his laptop or his smartphone to log in and try to check his bank balance with you. If you're a U.S. bank, let's just focus on that for a second. And you have every right to block them and say, hey, we're concerned here. But my question to you is, if that guy then subverts your controls by using a VPN or a proxy a few minutes later, you've just encouraged a very bad behavior. You have no better insight. You didn't ask the customer, hey, why were you in Iran? Oh, gosh, I forgot. I was visiting my mom. Here's my actual travel information. Here's the paperwork on it, et cetera. Whatever it is that you do to iterate. Or is that person actually running a business from there and they made the mistake of actually using their wrong phone? Now, let's just step back for a second and just think about this. Many of you have worked in or around narcotics investigations. Anyone who's worked in narcotics investigations, they've seen that, narcotics traffickers and smugglers, importers, when they have distribution cells, they'll be very meticulous. They might have 8, 10 burner phones, burner data phones. It's not unheard for people to be pulled over during the course of such an investigation and find 8 or 10 phones right there, because they've got a phone for each cell. They never use the phone for personal business. They never use one phone from one cell to check a bank account for another. They're very careful. They're very careful. Folks in FCC, they don't have to be careful, because let me just ask you this about sanctions. What prevents the representative for some sanctioned individual who's floating on a boat off of Cyprus from accessing 20 of your accounts under 20 different natural names? And the only thing in common he's got is his router name. He doesn't have to hide that from you, because unless he defrauds someone and the fraud guys catch a whiff and start looking at it and they find that digital attribute, oh my gosh, it's the same guy, the geolocation, the router, other things, they're all from the same spot. He can sit there on one device or a couple on a boat. FCC, they're not checking this stuff, folks. People are not checking enough. Some of you have advanced on this, and I'm really happy. I want the whole industry to be at a point where they're looking and saying, this is 20 different natural named signatories. Why would one digital identity be hitting them all in series, again and again, week after week? So that goes to my second bullet there, which is, wouldn't you find it concerning if multiple geographically disparate digital entities access the same account? This is the flip side of that. I was describing one person being able to sit on one device, and as long as they don't commit fraud, they're going to evade a lot of your control structures to move money in violation of sanctions, use shell companies, etc. But let's flip that around. What if you're operating an account and you've really gotten good at identifying funnel accounts, whether it's funnel accounts for narcotics, human trafficking, or other things? Are you checking to see if that one account is being accessed by individuals all over the country within minutes of each other? Are people ordering payments on things from all over the country within minutes of each other? Folks, that's not normal activity. It's not that abnormal for me to let my son in college use one of my accounts. I mean, heck, let's just talk about this for a second. Lots of movie streaming services out there. Let's just think about and lament about how far advanced movie streaming services are compared to some of our financial crime controls infrastructure. Let's talk about the fact that if you have a son or daughter in school, right now is a little bit weird in that regard, but as they get ready to go back to school, did you buy them a new iPad? Well, your movie streaming service that you have the family account on, they're smart enough to know, hey, family account is these persistent digital identities using these attributes, and heck, oh look, there's a new laptop popping up, but it's using the same credentials and login, and we've seen a drop off of the old one. That's definitely part of that family. It goes off to college because the device has persisted and 45 other attributes have persisted as it went to college. Now its geolocation and its IP address have changed, but it's still allowed to access your family account. Maybe you've got some multi-factor authentication kicking in, but they're going to let it access. But as soon as, well, if your child has shared their family credentials with 3 friends, and that sub-account starts to see contemporaneous or even near contemporaneous logins from 3 colleges around the country, it's shut down. You're going to lose that family account, or at least lose that user on it, or at least they're going to ask some questions. Now, why is it automated that we detect that kind of aberrant behavior when it comes to a movie streaming service, but most of us are not doing it in financial crime? You should know if digital identities using the same login credentials, which are geographically disparate, are logging in and accessing account, ordering wires, making payments, buying things, whatever it is. The third bullet is about comparing digital identity attributes to what you have in your broader customer base. This is what I was talking about a few minutes ago when I said, few of you have the time to request in FCC or AML or sanctions investigations, a download of devices and IP addresses, if that's what you're collecting. And then to then find the key devices and bounce them back out and say, show me where these have touched our entire environment. Folks, there are solutions that can bring that information to you in a visual, nearly instantaneous form. But let me tell you why this is important. So think about this. We have customers out there who are advanced in this space and are saying, all right, I have found a case of fraud that is reportable. It's hit my requirements for identification of actor and or amount. And I want to check to see if those digital identity attributes are associated with other perfected or attempted frauds. Think about this, folks. Nobody's going out and buying a smartphone burner phone for every account they want to hack. That's why you catch them in fraud all the time. That's why people on the fraud side frequently say, we shut them down here because we caught something in their application. We found 24 others pending and we shut them down as well. We froze them. We've blacklisted all these different attributes so they can't come into our environment again. You're creating friction for the criminal, and that's the goal. Friction for the criminal, no friction for the good. Let folks that are legitimately entitled to that and not having to commit fraud to get in. But what I'm saying is, why in fraud does it happen so quickly? It doesn't happen on the FCC side. You should be saving time and effort. We have customers out there right now who are leveraging digital identity information to make sure they file 1 SAR where they were filing 9. That means that they're linking together multiple cases that are coming up, even from their fraud channels in some cases where they haven't bundled them because they're treating them as singular events or singular groups. We have one customer that found a series of applicants for credit that were linked by geolocation and router ID to a handful of devices and identified nearly $1 million in potential fraud and headed it off and filed one filing on it, when in fact it could have looked like 50 different applications or 100 different applications. This is a time-saving thing. This is a effort-saving, and it also means that our critical law enforcement partners that receive suspicious transaction or suspicious activity reporting can act on it because it's a more distilled data set. It's very direct. Fewer reports, more robust info. On that note there, leveraging the digital intelligence of being able to file fewer SARs. There are also customers out there, entities out there, clients in the world that are taking and saying, you know, I took a more holistic approach to SAR 90-day follow-ups. And if I look at my SAR filing, and I know that the SAR was filed on July 1st, and I've got this fantastic analytics tool that pulls together analysis of these digital attributes and says these 8 devices are associated with these 8 accounts, but they're also associated with these 64 additional accounts. And we filed a SAR on July 1st. I can go back into that same analytical tool, pull up an event, look at it and say, give me all things that transacted after July 1st. Oops, look at that. On July 2nd, before everything was locked down, they slipped in another account. I have to report that. Everything else is locked down. Done. There's your review. People are using these kind of things to say, if I can link them by complex digital attributes, like device, router ID, tower data, and geolocation, etc., it's more accurate than just linking them by an email, because that one criminal may have 50 or 100 or thousands of emails. They're linking them together and reducing their effort of somebody going back and pulling up accounts in 20 different core systems to write another SAR follow-up proposal and have it edited and reviewed, and you're shaving that to a fraction of it. And that's really what we want, is to put those investigators on the next case, not the same. Shell companies is a really important topic right now. I'm actually, I'm in the middle of, at the risk of giving it away and someone steals my title, I'm in the middle of drafting up a piece on awakening the zombies. Like, I think this coronavirus has awakened shell and shelf companies around the world, but in the US at a frightening level. I think anybody that had a business incorporated that was dormant has either themselves attempted a COVID PPP related fraud or been approached by someone, which is increasingly becoming found in cases. There are people leveraging these established corporations, particularly shelf accounts, to create legitimacy when someone does due diligence on that loan. Well, we're waking them up. They're all coming to life, and they're all trying to steal money from our treasury in the US and from around the world. Okay? If a shell company, let's just think about this again. The shell company opens an account, and your geography either prohibits shell companies, or your firm subjects shell companies to the necessary additional scrutiny it probably warrants. When they onboard with you, if they are an obvious shell, they're going to fail. If they're at a corporate service provider address or an address where you have hundreds of other companies, it may fail. If they're identified as connected to some services introducer, it may fail, but all you're doing is perfecting them, because at the point they become your full-time problem, one of your customers, they've already cleaned up their KYC and CIP Act to get past your controls. By then they're perfect. But here's where shelf companies and shell companies get interesting, because if I'm a wealthy individual who's been sanctioned in the global environment, and I have some guy who's my money man, or maybe it's a team of guys that are my money men, I don't trust hundreds of people to move my money. I don't trust thousands of people to move my money. I trust one person or two, which means that those folks are sitting there banging away, ordering wires, checking balances on bank accounts around the world all the time. We know this. We know that Shell and Shell Corps are being used to launder fund proceeds of various illicit activities. So let me ask you this. Why would someone, if they've got 100 shell companies, which is a very easy number to reach in a complex sanctions evasions case, 100 companies, do you think they have 100 devices to check those balances? Absolutely not. Do you think they are worried about transmitting digital intel as they access those 100 accounts? Probably not, because very few of the banks and regulated financial services sector industry are checking those digital attributes or identifying risk in there. So what I'm saying is, once they onboard with you perfectly, get past your controls, that's where the account is turned over. The credentials are given away. Folks, that turnover of credentials, that giving away to someone, the selling of that shell company, and then later on its activation, whether when it receives stimulus funds or whether they want to launder funds out of it, that activation phase is by the customer. It's not going to present the same digital attributes that was done when the account was created if it's an honest shelf company. It's pretty cool. There's a deviation. The deviation is really informative. This is what I talked about when I said, are you looking at it in comparison to your KYC? If they claim to be a trading company that's based near the port in New York, why are they coming to me from a foreign IP? Why are they always hitting me through the Tor? Why are they always hitting me through a proxy? Why? They're trying to hide something? So I ask you to think about this, and we're just scratching the surface of the attributes that are valuable to you in this space. I put the next one down to say, and we're going to move on, and we're almost ready for questions. Have you ever checked to see who's accessing a PEPS account? Do you think the guy who is in receipt of hundreds of millions of dollars in bribes or diverted funds, now bear in mind, vast majority of politically exposed persons are completely honest. Vast majority. I mean, let's just be honest. Let's not be mean. The vast majority. So a PEP is a risk indicator, but only in the exception. Now, whether you believe that's a small amount or a modest amount, it doesn't really matter, because most PEPs are not going to raise a concern. Some of you have to still log them, track them, identify them at onboarding, but very few people with $600 million in bank accounts around the world are actually going to spend the time moving their own money. And the people that move their money may move it all over the place. They're not going to put their money in one place. They're not going to buy one building. They're not going to buy one boat. They're not going to have bank accounts and investment accounts at one institution. It is simply too risky. So they will be hitting bank accounts all over the place. And again, they're not going to use 100 devices in 100 different locations. They're going to be sitting at one Starbucks or in their backyard by their pool, and they're going to use a couple of devices, and they're going to sit on the same router, and all that info is available to be exploited in financial crime investigations. You would find that people that are not the PEP are accessing it. Wouldn't it be intriguing to you if someone whose business involved their influence over a foreign geography had someone in that foreign geography who was checking balances right before a large wire, or maybe right after? Because you know what? Sometimes your accounts are not even set up by the PEP, but someone acting on their behalf to move money for them, to bribe them or their family member. And then in those cases, the money launderer is often the guy checking the balance. It's the intermediary for the financial transaction, the illicit transaction, is checking those balances. And guess what? If you check him, he may not be handling business just for one. For instance, if you are the bribe guy for a global company, this is no longer far-fetched. In recent cases, we have seen global corporations that have actually established bribe offices. A dozen people working away to set up accounts and consulting entities to pay bribes through. They've done it. Well, guess what? That guy is leaving a long digital trail of the entities that he has established and the bank accounts he has created and where the money moves, and checking to make sure wires got there, checking to see if the client has gone and withdrawn the funds or the bribe person receiving the bribe. So it's pretty fascinating when you start to look at that. The last one here is, have you ever tried to analyze the behaviors? This is what sort of a sum of a suspicious actor as they interact with your controls environment. Remember, your controls environment was put there to reduce, whether it's transaction monitoring or IP blacklisting or watch list screening or whatever, it was put there to create a control to stop illicit financial activities. And the illicit financiers spend all day working to defeat it. And we know they do because no control is perfect, nor could it ever be. So guess what? Every time they beat the controls environment, they're getting better. So watch their behaviors. Here's what is fascinating. What we have proven by looking at e-commerce and the financial services sector is that when someone is denied a good or a service based on where they are, they're not told it's because of your location in all cases. And very rarely, in fact, are they told the reason at all. So they'll get back on and they'll try 3/4 of the same stuff. Maybe they get a new email, they get a new Gmail, they use a new burner phone to tie that Gmail to, they create new natural names, but everything else is the same. They're on the same device, same location, same Wi-Fi, same hundreds of attributes, and they get caught again and again and again, but not if you're not watching. Every time you turn them away, they perfect a little more. Folks, I just want to again make one point to you. We all know that crooked peps don't use one bank account, that sanctions evaders don't use one bank account, that human traffickers do not use one bank account, one trading account. They use many. They use many at one institution, and then they use a bunch at another. So the big question here is, why aren't we all sharing insights in this space more? Why, when someone in law enforcement is working a case, listen, law enforcement does a great job of working to do this. When they have a case, they try to get to the bottom of it very fast, but folks, in the beginning, they don't even know where they're trafficker in a human trafficking ring. Banks, they're checking different sources and looking online. They're sending out, maybe if it's a monstrous case, you'll get a 314A. Folks, we should have like an ongoing 314A information, digital identity attribute sharing environment where information on selected attributes, not about people, about the devices they use and where they are, can be rapidly shared, and also to prevent them from moving and hopping from one entity to another. I am so tired of watching sanctioned entities or entities that exceed financial crime risk hopping from one place to another and endangering another institution, finding another one that has lower control environments. This should be a collective effort, and that's the big case for the consortium play, and it's not even listed on here because it's just too aspirational right now. We need a public-private consortium that leverages this info. But in the meantime, the private side can do a lot more because, folks, inside your own entity, you are able to see a lot more risk than you may currently be seeing.